A very good day, everyone. My name is Isveri Sivalingam, and I'm the Southeast Asia lead at the Better Than Cash Alliance at the United Nations. I'm joined today by Arushi Malhotra, Senior Designer at Dalberg, who are our research partners for this toolkit. I'd first like to start by thanking the co-chairs of WC Think and WCPSS for this opportunity to share some key highlights, insights, and recommendations from the research that was concluded last year in collaboration with ASEAN. Before we get into the content proper, I'd like to start with a quick introduction to the Better Than Cash Alliance. We will then move on to the context and objectives of this work, followed by the methodology that was used to deliver this research. As we discuss the findings of the work, we will also talk through the current landscape in ASEAN when it comes to digital payments, the key research highlights, and finish with the policy recommendations. Based at the United Nations, the Better Than Cash Alliance is a partnership of governments, companies, and international organizations that accelerate the transition from cash to responsible digital payments to help achieve the Sustainable Development Goals. The Alliance today has more than 80 members globally who are committed to digitizing payments to boost efficiency, transparency, women's economic participation, and financial inclusion, helping build economies that are digital and inclusive. The Alliance Secretariat, which I'm part of, works with our members on their journey to digitize payments by providing advisory services based on their priorities, sharing action-oriented research, and fostering peer learning on responsible practices. We do this by also supporting advocacy by our members at national, regional, and global levels. As we talk about the research toolkit, I would also like to share a little bit about the UN Principles for Responsible Digital Payments, which was really the framing guidance for this research. The UN Principles for Responsible Digital Payments were developed by the Better Than Cash Alliance, guided by its member governments, companies, and international organizations in response to the UN Secretary General's Roadmap for Digital Cooperation. These principles are focused on the following. Firstly, prioritization of women as a key cornerstone for sustained development. 2, we would like to ensure that new technologies are developed and delivered responsibly. 3, it is important that a stronger user lens scrutinizes all aspects of digital payments. And lastly, these principles also include important recommendations to deliver positive and lasting change. The UN principles define who needs to be responsible, what it means to be responsible, and how to be responsible, and elaborates on the 9 key areas that you see on the slide, driven by goals of fostering greater inclusion and mitigating the emerging risks that we are experiencing in the digital payments area. The detailed discussion of these principles and good practices towards implementation are discussed and can be accessed by visiting responsiblepayments.org. We now move on to the research context and project objectives. In 2023, the ASEAN Chair Indonesia proposed an ASEAN policy toolkit to address key barriers faced by microenterprises in the adoption and use of digital payments and broader digital financial services. This policy toolkit aims to support the ASEAN Working Committees on Financial Inclusion and the Payments and Settlement Systems on outcomes related to advancing digital financial inclusion and ensuring consumer protection. It also seeks to inform the development of national consumer protection frameworks for digital financial inclusion as undertaken by ASEAN member states and their broader digital financial inclusion strategies. We hope that this will also support policy interventions that drive DFS adoption and use amongst the microenterprise segment. This research was guided by the following key questions. Number one, what are the trust-based barriers that microenterprises face in the adoption and use of digital payments and broader digital financial services? We pay specific attention to microenterprises that are owned by women, and look at what policy measures can address these trust barriers that are faced by microenterprises. With that, I pass it over to Arushi to take us through the methodology.
Thank you, Iswari. We deployed a mixed methods approach, and the methodology included primary research across 4 countries, that is Cambodia, Indonesia, the Philippines, and Vietnam. We also included desk research and expert interviews with not only financial sector service providers, but also with policy makers. The goals of our research were to identify drivers of trust by leveraging the framework of the United Nations Principles for Responsible Digital Payments. We also wanted to bring the voices of the micro merchants and their experiences with digital financial services to the notice of policymakers by employing a human-centered design approach. We also want to inform ongoing policy initiatives to better support micro merchants. Here you can see a snapshot of the merchants from Cambodia, Indonesia, Philippines, and Vietnam who took our time to share their day-to-day experiences and the journey of using DFS in their everyday interactions with their customers and also in their business. In the next few slides, I'm going to quickly focus a little bit on our methodology, which is human-centered design, and how that set the study apart and made it a bit unique. Our SCD methodology really enabled us to deeply understand micro merchants' context and co-create recommendations with all stakeholders, including policymakers and service providers. On the slide, you can see a snapshot of our HCD approach that we leverage at Dalberg, and this is focused on understanding the dynamics between stakeholders across the ecosystem. So here we have the financial services ecosystem. We work with all stakeholders, whether end users like merchants or service providers, to create solutions and strategies that overcome challenges and develop opportunities that are feasible and also implementable and usable. We begin this process, as you can see on the left-hand side, with planning, where we try to understand opportunity areas, organizational capacity, and feasibility, and start deep diving into the problem statement at hand. Our next 2 steps on learning and co-creating help us, which is learning and co-creating with stakeholders, helps us to identify findings, research insights, but also opportunities and challenges associated with our problem statements. The results from this stage, which are insights and challenges, opportunities, help us to define concepts and prototypes that we test with our stakeholders at the stages 4 and 5. Successful prototypes from this stage also undergo multiple rounds of iterations, and the ones that are able to demonstrate impact and are able to work with the stakeholders are scaled up after many rounds of testing. I want to quickly take you through a few principles of human-centered design that were leveraged as a part of this study. The first one is meeting people where they are. Deeply understanding a person's context comes from stepping into their environment, the environment of those individuals that we're designing for. It includes observing and interacting people, including micro merchants, in their real world settings. So whether it's in a factory, it's in their farm, or it's in their shop. This immersion allowed us to get a deeper understanding of the challenges, needs, and opportunities that people face, including micro merchants, when they were using these services. And when we engage with people in their environments, we can also see the full complexity of their lives. And sometimes it's not even just always about asking questions. Sometimes in SCD research, we also spend a lot of time observing how people interact with their surroundings and also with the technologies that they're using at that time. These observations often reveal insights that traditional research methods may end up missing. The second principle focuses on understanding the needs of individuals holistically. People are not defined by one dimension. Like many of us, our needs are multifaceted and often shaped by a combination of social, economic, and cultural factors. When we approach design from a human-centered perspective, we understand that people's needs go beyond just the functional or economic aspects. So, for example, when we're designing a health-based interventions, it's not just sufficient to focus on just an individual's physical health. We'd also want to understand their educational, social, and emotional needs as well. Where do they lie on those areas? These are equally important in creating a solution that truly serves the individual and also something that they can use for a long time. And these needs often intertwine with people's cultural and social contexts that define how people experience their world. So, for example, if I were designing a health-based solution, I would design maybe different features for people in the urban context and slightly different features or messaging for people in the rural context. Our third principle over here is on co-designing and iterating solutions with the stakeholders. In HCD, we don't design for people, we're designing with people. And this principle of co-design means that communities or end users are active participants in the design process. And this includes all range of stakeholders who would be involved in using a product or a service. So, because they bring their lived experiences, their knowledge, and their insights to the table, which in the end only improves and elevates a design. This collaborative approach ensures that solutions are not only relevant, but also more likely to be accepted and sustained by people that they're meant to serve. So, for example, whenever we're prototyping injectables, we would do that with the nurses who would use them at the end because they would understand the full extent of different scenarios that they would face in a day when patients are being stressed or when they're very nervous about getting injected. They would understand all of those situations, and that's what they would be able to help us understand what are the different situations that they would face. The process of co-design is therefore closely tied to iterative prototyping. We test and refine ideas through multiple rounds of feedback with the users, and that's how we're able to identify what early on in the process, what works and what doesn't work. So this allows for quickly adjusting and improving the product at hand. Iteration is a key part of our process, and it's important that we remain flexible and open to feedback, recognizing that our first idea might not be the best solution, but through feedback and adjustment, we can get closer to the right one. As we move on to the current landscape, I will hand it over to Iswari, who can take us through this next section of the presentation.
Thank you, Arushi. This research was fundamentally focused on understanding trust-based barriers that micro merchants, especially women-owned micro merchants, face in the adoption and use of digital payments. And I'd like to quickly talk about why this research is critical and very important today compared to even 3 years ago. Firstly, ASEAN member states have been at the forefront of developing digital payments infrastructure, particularly low-cost options, driving rapid digitalization and financial inclusion. Across ASEAN, 80% of financially included adults made or received digital payments in 2021, compared to just 69% in 2017. Indonesia's QRIS, Cambodia's KHQR, and Thailand's PromptPays are examples of how 8 out of 10 ASEAN member states have developed and adopted low-cost national quick response payment channels in recent years with merchant-specific features. The rapid rollout of quick response or QR payment channels has also touched micro merchants. There are 70 million micro, small, medium-sized enterprises, or MSMEs as they're commonly known, in the ASEAN. They are not only the lifeblood of our economies, but also a critical player in building the digital payments and financial services ecosystem. Moreover, digital payments have the potential to serve as a pathway to broader financial inclusion for this segment, who are typically under or worse, unserved by the formal financial system in many ASEAN markets. This is very much about inclusion and to ensure that micro merchants have a pathway to be onboarded and to also benefit from the ASEAN region's growing digital economies. As we know, acceptance is a function of trust, and that is only established when digital payments and broader digital financial services work as expected and repeatedly. Let's have a look now on how many merchants have been onboarded onto QR channels across the region, and how many of these merchants are actually using and accepting digital payments. The secondary research available today reveals that only a small fraction of micro enterprises currently accept digital payments. If you look at the slide, it shows that only about 20 to 30% of merchants who have been onboarded onto QR channels are actively using and accepting digital payments through these channels. So this really begs the question, why? We'll now move on to some of the key research insights that help to explain why micro merchants across the region could be facing certain risks and trust barriers that sustain their continued use of QR channels and digital payments more broadly. There were a total of 10 user experiences that have been mapped against selected UN principles for responsible digital payments, namely, ensure funds are protected and accessible, safeguard client data, be transparent, particularly on pricing, and responsive recourse. I will be taking you through the first 4 insights, starting with key adoption pathways for micro merchants. Micro merchants take up multiple adoption pathways. Generally, they begin their DFS journey as retail users, after which they start using the specific merchant function or modality to accept payments. There are 5 distinct categories for micro merchants DFS adoption, which is discussed in greater detail in the toolkit. Number 1, among interviewed micro merchants who have adopted digital financial services, mobile banking applications and mobile wallets are the most commonly used platforms, with the latter filling a key gap for the unbanked. In the case of the former, most micro merchants transitioned using the bank's offline services to their digital platforms, offering a convenient extension of their banking services from their smartphones. Meanwhile, mobile wallets offered a more accessible alternative for the unbanked to conduct basic transactional activities such as money transfers and bill payments. Gender is also a critical lens for understanding these trust-based barriers, as highlighted in the earlier sections of the toolkits. There are gender differences in the way women and men interact with digital financial services. To ensure that women are recognized and prioritized, some of these key insights have been derived by comparing male and female micro merchant responses and their interactions with digital payments. If you look at the toolkit, these are separated according to the gendered experience. While male and female micro merchants are introduced to digital financial services through similar channels, female micro merchants primarily get onboarded through guided support from trusted sources. This action contrasts with that taken by men, who often actively take the next step and independently onboard to the apps. However, female micro merchants mostly use digital financial services and their device with support from others. It is found that they are often unable to explore the app independently, and hence a one-size-fits-all design philosophy does not account for the lived experiences of women micro merchants and is ultimately detrimental to support their digital payments or digital financial service uptake. Hence, one of the key insights is that comprehensive handholding from government or financial service providers goes a long way in building lasting tech confidence, especially for women micro merchants. I now move on to the third insight, which is based on the UN principle around ensuring funds are protected and accessible. Our interviews found that many micro merchants face a looming fear of potential mistakes, and this reduces their self-belief in using technology. This is especially the case for female micro merchants. What we also found, which is supported by secondary research, is that most micro merchants have lost some money because of mistakes, such as transfers to wrong accounts, or worse, through scams. Women micro merchants in particular feel that mistakes are inevitable, and this corresponds to a survey of more than 1,500 Asia Pacific respondents who found that 52% of users had experienced money theft, 72% of users had experienced at least one form of online scam involving digital payments, indicating that the fear of losing money is a lived reality for many, including micro merchants. And it's important to address this issue, particularly for this segment. As mentioned earlier, many of them are new to formal financial services, secondly, to digital financial services. And a loss of funds, even if small amounts, hits harder than any sort of benefit and does lead to dropping off digital financial services or dropping off using or leveraging that specific financial service provider. For example, in Indonesia and Vietnam, many micro merchants indicated that the experience of fund loss due to scams, fraud, service disruption, and accidental transfer deeply affected their trust more than the amount that was actually lost. Indonesia and Vietnam are in the top 20 countries most affected by scam and spam calls across the region.
I'd like to share now a short excerpt from a micro merchant that we spoke with in Indonesia and her experience on using digital financial services. To help me run my business, I use multiple e-commerce platforms such as Tokopedia, GoFood, Shopee Food, and GrabFood. My kids were the one who introduced them to me, and over time, I transitioned from being a user to a merchant on them. At the store, I offer a range of payment methods for my customers, including cash, Curious, and mobile wallets such as Ofo, Dana, and GoPay. I started using Curious in 2020 after joining the local Micro Enterprise Association, UMKM, and Jackpreneur program, which is a government-led program in Indonesia. Through this program, I have learned about many things, like how to get the halal certification and how to get a patent. Although I manage several applications, their user-friendliness, especially the reporting features that provide a clear view of daily activities and transaction history, simplifies the process. These apps even send reports directly to my personal email. I'm going to now share the experiences we heard from the micro merchants on the remainder of the points, starting with data privacy and safeguarding data privacy. While all merchants value their privacy, and only few have the know-how on staying smart online. Most micro merchants also felt that the burden to stay safe online largely rests on them completely, which creates a huge mental burden for merchants. Moreover, the current privacy practices that are practiced by the digital financial services leave micro merchants feeling rather overwhelmed and distrustful of DFS, as privacy notices that are shared when they're accepting or rejecting their app causes severe cognitive overload. It's a lot of text, it's a lot of technical legal text. And in the absence of easy to comprehend privacy policies, merchants simply accept the terms and conditions on an app to be able to use the DFS, which further compounds mistrust and apprehension while using a DFS. Many merchants we spoke with were aware, and so these were on privacy. I'll just move on to the ones on transparency on pricing. Many merchants that we spoke with were aware and comfortable in paying some form of fees while using digital financial services, especially when the volume of online transactions becomes almost comparable to the cash-based transactions. And in these situations, micro merchants are far more comfortable in paying the fees of an app. However, several merchants only learned about the fees after they are charged with that amount, which especially hurts trust as merchants were largely willing to pay the fees in the first place. Moreover, fees are not easy to decode and cause micro merchants to disengage, especially female micro merchants who are especially time constrained. What we mean by over here is that there is a very complex web of fees that micro merchants have to contend with. You can find more details on this in our toolkit, but a quick example would be in some cases there is an admin fee, in some cases there might be a fees leverage when you're using a different app. And not a lot of merchants have time to learn about the different types of fees that gets levied on their usage. And female micro merchants, as we've highlighted, especially have a harder time in spending time to understand these different fees because they tend to be more time constrained than other merchants. What we noticed in Vietnam and Cambodia was a slightly different experience. There are fewer fees over there. So there are fewer fees over there, particularly in Vietnam when we're using apps like Momo and wallets like Momo. I'm going to now share another story of a merchant who's had an experience with data privacy. This is an individual, this is a merchant we spoke with in Vietnam, and this is their sort of experience on using mobile applications. My information got leaked. I don't know who sold my number or from where it was leaked. I've been annoyed a lot by this because many people call my number asking if I want to buy property or get a loan. I use the same number for my business, so I have to take all the calls in case customers are calling me. I am concerned about my personal information leaking. They knew my name and my phone number. I do not read terms and conditions carefully, and I believe that many people are the same. I sometimes do not even read them and just agree with them. These are necessary in order to use the apps. Since I trust the apps, the terms and conditions do not really matter to me much. I care more as to whether the apps are convenient to use. If there are more cases of scams or inconvenience, I would just stop using them. This brings us to our points 9 and 10 on recourse, um, and what works for recourse and what didn't. In a few cases, few merchants have had positive experiences when they sought recourse on a DFS, and this positive experience converted them into loyal users of that DFS. The merchants highlighted quick response on the recourse, easy solution provided by the recourse team, and clear timelines by when their problem would be resolved. And these aspects were what put them at ease while using digital financial services and also at the same time using the recourse provided by them. Yet, almost all merchants that we spoke with had not engaged with recourse as they did not find them to be designed for them in the first place. Even though loss of small amounts did cause an erosion of trust, what we found is that most merchants who lost money still chose to not seek recourse or any form of redressal because they felt that the entire process was not worth it. It found it incredibly cumbersome and not designed for them. These are a few sort of highlights of the key experiences that make or break trust for micro merchants when they're using any form of digital financial services. As the next section, I will request Iswari to come over and share some of the insights and summary of the policy recommendations that are part of the toolkit.
Thank you, Arushi. So in the final section of this webinar, we will take you through the 5 key policy recommendations that are elaborated in the toolkit. And these are really intended to improve merchant experience with and to bolster their trust in digital financial services. We start with the first recommendation on enabling seamless recourse, especially for small amounts. At the regional level, ASEAN has made significant progress in establishing standards, regulations for digital financial service consumers. Several initiatives point to this progress, such as the ASEAN Strategic Action Plan on Consumer Protection and the ASEAN Alternative Dispute Resolution Guidelines for Consumer Protection 2021. However, specific guidance on small value recourse is missing in country legislations. Recourse for small amounts warrants special focus, given that these small payments are now the prevalent ones on regional instant payment systems. So they reflect the vast majority by volume of transactions and are also the most commonly disputed ones. Of the micro merchants that we spoke to, those who did speak recourse did so because of surprise fees, pending payments, or mistaken transfers. Micro merchants believe that as the amount is small, recourse should be simple and refunds should be almost immediately. With these expectations in mind, we'd like to go through the following key recommendations. Firstly, to provide industry standards on timelines, compensations, and procedures for common small value disputes. ASEAN member state regulators can provide guidance on recourse for small value transactions, streamlining processes for dispute resolution, expediting timelines, and simplifying resolution procedures. In many ASEAN member states, standards for general recourse already exist. These can be further supplemented by considering expedited handling procedures and timelines for recourse for amounts below a stipulated threshold. Number 2, regulations can help ensure that financial service providers have an internal complaint handling unit to efficiently address disputes regarding small amounts. While redress is explicitly recognized as a consumer right by law across ASEAN member states, other consumer protection laws relevant to recourse, such as internal complaint handling by business, are not available across all countries. ASEAN member state regulators can consider mandating that financial service providers form a customer complaints unit that address disputes regarding small amounts. These can be easily resolved with proper communication with financial service providers, foregoing the need for alternative dispute resolution channels that are often time-consuming and cumbersome, which most micro merchants do not wish to go through, especially for small amounts. Number 3, Multimodal access to recourse systems could be encouraged to handle the high frequency and volume of small value disputes. Micro merchants are familiar with traditional in-person or hotline-based recourse. However, these can be consuming, cumbersome, sometimes involve hidden costs, such as the cost for calling the hotline or the loss of business from closing the store to seek recourse. Innovative avenues such as chatbots and social media customer channels or AI-powered interactive voice response systems can solve this solution. Given the high volume and frequency and similar nature of small value disputes, these mechanisms can reduce hidden costs and be programmed to provide quick responses, clear timelines, and expectations for resolution. These are the key elements of positive recourse as identified by micro merchants. And regulators and policymakers have a big role to play in encouraging financial service providers to also provide innovative recourse mechanisms to address the high frequency and high volume nature of disputes. Given the high volume and frequency and similar nature of small value disputes, these mechanisms can reduce hidden costs and be programmed to provide quick responses, clear timelines, and expectations for resolution. These are the key elements of positive recourse as identified by micro merchants. And regulators and policymakers have a big role to play in encouraging financial service providers to also provide innovative recourse mechanisms to address the high frequency and high volume nature of disputes. The launch of innovative recourse channels can also be augmented by consumer education on accessing and using the service. 4, we encourage regulators to mandate financial service providers to report their average response times on a public database, disaggregated by the type of complaints and the amount lost. Some micro merchants who seek recourse have very poor experiences, primarily because of the unmet expectations on the time that is required for recourse. ASEAN member state regulators can consider mandating and reporting average recourse response times for common issues on a public database, disaggregated by the type of complaints and the amount lost. When faced with similar problems, micro merchants and other users can refer to the public database and set realistic expectations for recourse based on other similar experiences. Other benefits of publicizing this information include increased financial service provider transparency and accountability, benchmarking, public confidence, and informed decision-making. Public disclosure and ranking can also create reputational incentives to improve recourse. We now move to the second recommendation on shifting the burden of data privacy away from users. We recognize that ASEAN has promoted safe information sharing and data privacy through multiple regional frameworks. However, more efforts could be helpful in shifting the burden away from micro merchants and adapting to the rapidly evolving digital environment. Firstly, the development of standardized data privacy messaging that simplifies the terms and conditions is important. Most ASEAN member states have a data protection law to regulate the collection, storage, and use of personal data. Yet, current consent and privacy practices can be complicated and often require additional confirmation, especially when changes to consumer and data protection are made at the national and sectoral level. Micro merchants often describe how immediate acceptance of a complex privacy terms and conditions document is convenient. Many micro merchants use digital financial services without considering the cost of sharing personal data or have the tendency to choose immediate rewards over future benefits. ASEAN state regulators can consider simplifying and standardizing data privacy messaging to ensure user comprehension across increasingly diverse providers, products, and features. Receiving information in a simple and repeated format can help to build user understanding of complex terms and conditions. Next, developing a voluntary privacy seal program for financial service providers as a visual cue is helpful to indicate that the service complies with standardized data protection practices. Similar to the previous recommendation on standardizing data privacy messaging, visual cues can shift the burden of data privacy away from consumers and onto financial service providers. The ASEAN member states can convene relevant ASEAN member stakeholders to explore the feasibility of a region-wide certification for compliance. This action can build on existing regional consumer protection and consumer and data protection frameworks and enable instant recognition of data protection compliance through a simple visual cue. Lastly, it is important to educate consumers on the types of data collected and the data privacy risks through government-backed communication channels and social media channels. Raising awareness is critical as many data privacy risks are unique to new interactions with digital payments, and accidental data leaks can spread data on a much quicker and larger scale than most micro merchants are aware of. And now I'd like to invite Arushi to take us through the last 3 recommendations in the toolkit.
Thank you, Iswari. The last 3 recommendations I'm going to quickly focus on a little bit. The first 2 are focused on empowering female micro merchants, and here I wanted to kind of also highlight that a lot of AMS have expedited the adoption of digital financial services through integrating them in existing entrepreneurship related interventions, whether they may be focused on building the capacity of micro merchants or whether they're conducted to improve their financial literacy, but embedding them very deeply within the existing programs has proved to be rather fruitful. And it's a recommendation that we have where we saw a lot of micro merchants actually find adopting and using DFS in a more sustainable and trustworthy manner when they are onboarded on it in a comprehensive way. So if policymakers can consider leveraging existing entrepreneurship and micro enterprise programs to onboard and support micro merchants on DFS. What we also found was that a lot of these programs where there is a targeted focus on micro merchants, what we observed was that they're almost organically or by design, a community of micro merchants usually develops or organically grows around these programs. This specific community also helps other micro merchants to feel more comfortable when they're using a DFS. They can use the same community to also seek any sort of support. So, for example, if they've onboarded themselves and they don't know how to easily access their money, oftentimes we saw that they reached out to each other to better understand how to get comfortable with digital financial services. Second, one of our other gendered recommendation over here is around collecting gender disaggregated data to identify specific barriers female merchants faced. Um, as Isri also mentioned in some of our earlier research insights, we did choose to understand what are the different experiences male merchants face when compared with female merchants. And we found some very specific types of challenges that female micro merchants face, which are linked to how confident they feel about using any form of financial and or technological service. And ASEAN has already sort of demonstrated its commitment to women's economic empowerment, particularly through initiatives like Gender Mainstreaming Strategic Framework from 21 to 25. Also, WC thinks ASEAN Monitoring Progress Financial Inclusion in Select ASEAN Country report also provides research on barriers on financial inclusion and financial capabilities, specifically for women. And certain ASEAN member states have also recognized that it's important uh, to ensure that female micro merchants and citizens as well have certain level of digital and financial literacy available for them. And so in this context, we suggest or recommend the collection of gender disaggregated financial data, not only on the usage of the products and services, but also on the data protection challenges they face, the types of experiences on which they're raising redressal, and what have been the redressal rates for these female micro merchants. Typically, women micro merchants are a majority, sorry, amongst the micro merchants. And what we found in our interviews was that women tend to rely more on their social networks and government programs when they want to adopt DFS. They're also deeply disinclined to engage deeply with fees, concepts of different types of fees, and they're more likely to blame themselves and not seek recourse when something goes wrong with an app. And this unfortunately presents a rather incorrect picture of usage of DFS by female merchants. Moreover, the lack of gender disaggregated data on the use of products, the prevalence of data breaches, the rates and satisfaction of seeking recourse is a missed opportunity to better serve female micro merchants in this area. Lastly, I want to talk a little bit about encouraging user-centric pricing communication. One of the other challenges that we found at micro merchants that led to micro merchants distrust digital financial services was on fair and transparent pricing. Many micro merchants, as we may recall, found out about the fees, different types of fees on these apps through surprise, or they felt that they was not clearly communicated to them. Several ASEAN member states have already provided guidelines for fair consumer pricing of financial service products. Um, and I think this is being already followed in countries like Philippines and Malaysia and Singapore. Nonetheless, many micro merchants that we interviewed still felt that this information was not clear and very sort of easily accessible to them. They often only found out about these guidelines once they were charged, which just created which created a very poor experience to them for using these applications. So adding sort of more clear communication guidelines on how fees should be communicated is going to have a slightly more positive experience of using these apps. While micro merchants tend to be broadly aware that there will be fees that they might have to use, they're not that inclined or encouraged to dig deeper. It's just very hard. They don't have that much time. There's also lack of mental bandwidth to spend on understanding the nitty-gritties of these kinds of fees. I'll pause over here. These were all the recommendations we have. You can learn more about the research insights and read more of the toolkits on read more of our recommendations on the policy toolkit and I think you can get a link if we just go to the next slide. We can scan a copy and access the report over here and get more insights on our research findings, our methodology, who we spoke with, the financial service providers that we interviewed, and go more in depth in our policy recommendations.
Thank you, Arishi. With that, we come to the end of the webinar. I would like to thank all colleagues for your time and for staying through this entire discussion. We look forward to more in-depth discussions, specifically on the recommendations around recourse and data privacy and protection when we meet in Penang next week. Thank you very much.